The US dollar heads into Friday on a firmer footing after another round of resilient US economic data reinforced the narrative that the US economy continues to outperform its major peers. Weekly jobless claims unexpectedly fell, highlighting ongoing labor market strength, while the Philadelphia Fed manufacturing survey surged well above expectations, offsetting softer retail sales growth that nevertheless met consensus. The combination has pushed Treasury yields modestly higher, supporting the dollar and tempering the dovish repricing that followed this week's softer U.S. CPI and PPI reports. Fed officials continue to strike a cautious but inflation-focused tone, with Vice Chair Jefferson saying policy is appropriately restrictive for now, but leaving the door open for further tightening if inflation proves sticky, while Dallas Fed President Logan again highlighted AI investment and energy costs as potential upside inflation risks. U.S. equity futures are relatively mixed following Thursday's sharp technology-led sell-off. The Nasdaq suffered the heaviest losses as semiconductor and AI-related stocks extended their recent correction despite another solid batch of economic data, while financials continue to outperform on the back of higher yields and resilient growth expectations. Investors are increasingly balancing confidence in the U.S. economy against concerns that sticky inflation could keep interest rates higher for longer, while earnings season is beginning to provide another important catalyst for individual sectors. In commodities, oil has eased modestly after its recent rally, with some profit taking emerging despite the continued geopolitical risk premium. Markets continue to monitor the escalating conflict between the U.S. and Iran after Washington expanded strikes to transport infrastructure around Bandar Abbas while maintaining its naval blockade, developments that continue to pose upside risks to energy markets, even if prices have yet to fully reflect the deteriorating security backdrop. Gold has meanwhile fallen sharply below the psychologically important 4,000 level as the stronger U.S. dollar and higher treasury yields reduce demand for non-yielding assets. Looking ahead, attention turns to final Eurozone inflation data before the North American session, which is going to be highlighted by U.S. housing starts, building permits, industrial production, and the preliminary University of Michigan Consumer Sentiment Survey. While today's calendar is busy, markets are likely to remain especially sensitive to any developments out of the Middle East, with geopolitical headlines continuing to compete with economic data and central bank expectations as the dominant driver of global market sentiment heading into the weekend. That's all for now.